Stock market pressure. Are traders picking up on sell signals this week? In today's cover story, will hackers wreak havoc on this Cyber Monday? Plus, entrepreneurs seek a fast track onto the public market. And mark your calendars, find out when are the best days to buy airfare for the holiday travel season. First Business starts now.
You're watching First Business. Financial news, analysis, and today's investment ideas.
Good morning. It's Monday, December 1st. I'm Chuck Coppola. Angela Miles has the day off. In today's First Look, back in action. Traders head back to work today after the shortened holiday week. A wild day could be ahead as many traders took off early for the Thanksgiving holiday amid a slew of economic data out Wednesday that signaled a dip in hiring and a slight increase in consumer spending. It'll also be a wild day on the web as consumers prepare for Cyber Monday. Motorola is celebrating by giving out penny phones. The company says it'll sell its new Moto X phone for just 1 cent today for consumers who sign up for a 2-year contract with Verizon. And backed by popular demand, Mark Zuckerberg, the Facebook CEO, will hold a public Q&A session next week. In November, Zuckerberg invited Facebook fans to ask him anything. It was such a success, Facebook will hold round 2 on December 11th. Trader Todd Horwitz of Average Joe Options gets the ball rolling for us on this Monday. Good morning, Todd.
Good morning, Chuck. How you doing?
I'm doing well, thanks. Todd, after low volume last week, what do you think will be in store for today's trading session?
You know, I think it really depends. I think we're probably a little toppy here. I wouldn't be surprised to see a little bit of selling early in the week. You know, we do have the jobs number on Friday, so I think it'll be probably fairly neutral, but I wouldn't be surprised to see a little bit of selling pressure early in the week.
Any names out there you want to talk about for buying or selling?
You know, I think you want to look at, I think now it's time to look into some of the more safer utility type stocks, the AT&Ts, the Verizons. I think you're seeing a big switch throughout the major players in the world have switched out of some of the momentum stocks into a much of the safer dividend paying stocks.
What about retail? This is the holiday season. There are going to be a lot of retail names tossed about. Do you buy or sell now, take a position, or do you wait until the dust settles?
You know, me, I'm a seller of retail. I think this is going to be the year the Grinch stole Christmas. I think it's going to be a very tough year for retailers. Margins are going to be weak, and I don't think that they're going to get quite the season they thought they were going to get.
You think that's because consumer confidence may be high, but we're still a little reticent to part with that dollar?
You know, I think that consumer confidence may be high. I don't know that I actually buy into that. I think that the middle class, who is the real spender, is still in a real recession, and that really becomes a problem. I don't think they have the dollars to spend.
Got it. Thanks, Todd, very much.
Thank you so much.
Paul Egger steps in now with a word of warning on this Cyber Monday. Good morning, Paul.
Good morning, Chuck. In today's cover story, the online holiday shopping season clicks into high gear this Cyber Monday, with Santas everywhere expected to snap up more than $2.6 billion in gifts today alone. But buyers beware. Data breaches and phishing scams continue to cause problems for consumers and retailers.
Search engines and websites will show off deals on just about anything and everything today. Still, that super low price may come with a catch.
If the product is half off and it's never on sale anywhere else in the world, that's usually an indication that the offer is too good to be true, and it usually is. We hear from consumers all the time, every year, that they buy, fraudulent or counterfeit products.
Steve Burness of the Better Business Bureau also says shop only at sites with good reputations and beware of spam sent to your inbox.
Never follow email trail, because those usually send you somewhere else. Go to the company directly.
A lot of the emails that end users are getting today that have special deals and promotions and coupons and stuff on them are actually fictitious.
Bigger than phishing scams sent to individuals are data breaches infecting businesses. Target and J.P. Morgan Chase have both fallen victim in the past year, and IT experts only expect more to come.
I don't think I'd have to be Nostradamus to think that something's going to happen. It would be surprising if something didn't.
Jerry Irvine of Prescient Solutions believes retailers are trying their best to protect customer data, but the bad guys trying to break into systems still hold an edge.
Hackers' technology is just greater than our security technology. They know what we have from security and can pinpoint and target it. We don't know everything they're going to do from a malicious application, so it's very difficult to protect.
To protect against what they see as inevitable data breaches, Burness and Irvine offered these tips. Register as a guest on retail sites so your information isn't saved. Use credit as opposed to debit cards. They typically have better fraud protection. And check your account activity frequently for any suspicious charges.
Facebook could be falling behind. A new study of the fastest growing social media platforms finds that Tumblr and Pinterest have had the largest increases of active users in the past 6 months. Tumblr had the biggest gain, a 120% jump. Pinterest saw users increase by 111%. Facebook, meanwhile, trailed behind at just 2%. The social network, however, still has a massive following of over 1 billion active users per month.
Cyber Monday is also shaping up to be a big day for travel discounts. Airlines and travel websites are promoting mega deals on airfare and hotels today. Orbit's editor Janine Tornator says shoppers looking to book for Christmas or New Year's are in luck.
For travelers that are going somewhere over the Christmas or New Year's holiday, if you haven't yet booked your airfare, you should know that the least expensive day to travel is looking to be December 23rd for Christmas travelers and December 31st for New Year's, actually heading out on New Year's Eve.
Projections show travel costs for the Christmas holiday will reach $66 billion this year. That's as hotel prices climb by 22% and airfares rise by 6% over last year.
This month, the Federal Aviation Administration is preparing to unveil new regulations for commercial drones. Drones have become more mainstream due to advances in technology. However, federal regulators have yet to release rules for people who want to own drones for business. The FAA is expected to regulate the time of day drones may be flown and how high the devices may fly. Meantime, GoPro could be getting ready to get in on the action. The Wall Street Journal reports GoPro could branch out into developing drones for consumers. Drones with high-definition cameras could sell for between $500 and $1,000.
Auto sales numbers are out tomorrow, and already analysts predict it will be a November to remember. Cars.com reports auto sales could top 1.2 million vehicles. That's up 3.4% from last year and would mark the best month since 2004. Analysts believe year-end clearance deals for 2014 vehicles, a wide selection of cars and trucks, and low gas prices could drive sales to the highest level in a decade.
Toyota is moving ahead with crash prevention technology. The Japanese automaker will offer the safety technologies for new cars in the U.S., Japan, and Europe by the end of 2017. The systems use a camera and radar to detect objects near the car and alert drivers to slow down or brake a vehicle automatically to prevent collisions. In mid-sized cars to high-end cars, it'll be called Toyota Safety Sense P and cost about $500. For compact cars, Safety Sense C will cost around $420.
Takata is on deadline to expand its airbag recall nationwide. The National Highway Traffic Safety Administration is giving Takata until tomorrow to expand its recall of potentially explosive airbags to cover the entire U.S. Currently, Takata recalls have been limited to 2 states. If it neglects to address the issue, the airbag maker could face fines of $7,000 per car. That could push penalties into the tens of billions of dollars. Automakers continue to face fallout. Chrysler said last week that its recall of cars with Takata airbags will begin 2 weeks earlier than expected. The automaker said it will decide this week whether to expand that recall to more regions.
Business owners who are ready to take the next big step and become publicly traded are frustrated with what they call major financial hurdles that they have to jump through due to strict Securities and Exchange Commission regulation. Kai Sisson reports from Capitol Hill.
I'm Dan Weber, president of AMAC.
When Dan Weber founded the Association of Mature American Citizens, he had no idea that in just 7 years, his company would grow to 250,000 members. But as Weber looks to expand and apply for an initial public offering, he is unable to because of regulations from the Securities and Exchange Commission.
Because of restrictions in the SEC under Section D and 506, there are too many restrictions, so we can't get the capital that we need.
Rule 506 of the SEC's Section D prohibits companies from raising capital from anyone other than accredited investors, basically outlawing crowdfunding through the general public. Companies then need to raise an enormous amount of cash through other elite investment sources, which economists say is unfair to small businesses.
Right now, we have a situation where you literally have to spend, according to the SEC's own numbers, $2.5 million to access the public capital market, and then $1.5 million in lawyers and accountants each year. That's an insurmountable barrier for most small businesses.
Weber is committed to going public, and his top priority is seeing his customers own the company.
And one of the things we don't want to do is to get a big fat investor to take over our organization. We want our members to own the organization, and the regulations prohibit us from having our members buy stock.
Daniel Gallagher is the commissioner of the SEC and has been outspoken on the need to change these regulations so companies can grow more efficiently.
But sadly, we at the SEC are not doing nearly enough to ensure that small businesses have the access to capital that they need to grow. As an SEC commissioner, I believe that this issue warrants the agency's highest level of priority.
The Jobs Act, signed by President Obama in 2012, did alleviate some of the restrictions on small businesses, but what the SEC is out to fix is how to protect the public from shady investments while lessening the hurdles for entrepreneurs to raise capital. Outside the Securities and Exchange Commission, for First Business News, I'm Kai Sisson.
At a forum in Washington in October, Tim White, the SEC's special counsel on markets and trading, said that he cannot estimate when changes will be made, but since the Jobs Act of 2012 allowed the SEC to make changes, it has yet to happen.
Ride-sharing startup Uber could soon be worth more than Twitter. Bloomberg News reports Uber is currently in a fundraising cycle that could double its value. In June, the company was valued at $17 billion. Now, fundraising could put Uber's valuation closer to $40 billion. Bloomberg says the company is still in talks to go public. The fundraising would not only make Uber more valuable than Twitter, but also larger than many of the companies in the S&P 500.
On the economic calendar for today, watch for the ISM Index for November. And on the earnings calendar, it's New York & Company and Shoe Carnival. Still to come, why Cyber Monday is all about timing this year. Plus, background check, how ethnic roots play a role in money management. And after the break, who's the better investor, men or women? That's after today's In the Know message. A recent study finds women are outperforming men when it comes to investing. A 5-year study by the Financial Times finds hedge funds run by women returned an average of 82.4%, while those run by men returned only 51%. Kathleen Grace, a financial advisor and author, explains why women may be wired to be better investors.
Women tend to, and this is part of his study, have a more awareness of their emotional biases and can learn to sit back, gather the data before they make the decisions.
Only 3% of hedge funds were actually run by women at the time the Financial Times study was conducted. Bill Mahler joins us now with other trends in investment habits.
You know, our investing habits, they can differ according to all kinds of different things. Life experiences, our core beliefs, and also this might surprise you, our ethnic background. That's right. A study by the investor research firm Spectrum Group did some research on the attitudes and habits of America's ethnic investors. That's Hispanics, Asians, and African Americans. Kathy McBreen is the president of Spectrum's Millionaire Corner. It's sort of the retail consumer side of what Spectrum does. Well, what was the aim of this? Why did you figure there were going to be differences among ethnic groups?
You know, it was sort of a feeling that we had based on the research that we do all the time, that perhaps some of the ethnicities actually had an influence on how people were making decisions.
Well, that was borne out by the findings.
It was.
Tell me, what was the most surprising to you?
A few things were interesting. I don't know if they were surprising, but they were really interesting, or they validated some of the things we felt. Asian investors, for example, are very likely to do a lot of research on their own before they go to a financial advisor. They're the least likely to want to use a professional financial advisor, and they also are the most likely to feel that they might know more than a financial advisor.
Okay, so, and Hispanics?
Hispanics are very loyal to their advisor. It's like they take a long time to find one, but once they find someone, they're very loyal, and they really want to spend time with that advisor.
And how about the African American investors?
So the African Americans, we find, it's interesting, they're more likely to recommend their advisor than anyone else. But the other thing that was interesting about them is they're more likely to have found the advisor because that advisor was trying to sell something to them. So it may have been an advisor that was trying to sell them an insurance policy or somebody who was trying to sell them a mutual fund or something. That's how they formed their relationships.
So interesting. Now, you know what is different. I don't suppose you looked deeply into why there are these differences, did you?
Well, sometimes you can tell by the types of backgrounds and businesses that they're in. So, for example, when we look at the overall, occupations, the Hispanics were likely to be business owners, so they wanted somebody who was familiar with their business, that they might be able to refer business to and was local. The Asians were more likely to be professionals, doctors, lawyers, and that's consistent with what we see with a lot of other professional investors, is that they like to think that they know a lot. Sometimes they do, sometimes they don't, right? And then the African Americans were sort of a hodgepodge of different occupations. Some were professionals and some not.
Kathy, briefly, I can understand why this is valuable to investors or the investing community, but how about to just the average investor? What can we take away here?
I think what you take away from it is you take the best habits of all of these different ethnicities and you apply them to what you're doing yourself. So it makes sense to be able to do a lot of your own investment research on your own. It makes sense to be loyal to an advisor and expect them to reach out to you like the Hispanics do. So, and to be comfortable enough to recommend them like the African Americans.
All right. Excellent takeaway, in fact. Kathy McBreen from Millionaire Corner, thanks.
Thanks.
Coming up, what a farming evolution could mean to John Deere stock. Plus, find out who retail watchers are calling the king of Cyber Monday. We'll be right back. The Monday after Thanksgiving, which retailers have come to call Cyber Monday for all of the online shopping done at work, saw a 21% increase in online sales last year. Trey Bosch, senior editor of RetailMeNot.com, joins us. Hi, Trey.
Hi, how are you?
Doing all right, thanks. Given that consumer confidence in November rose to its highest level in 7 years, what are retailers now expecting?
We are expecting a really good holiday shopping season in general. National Retail Federation is predicting about a 4.1% jump over last year. So we could reach $616 billion in shopping over the holiday shopping season, which is November and December. Now, last year, Cyber Monday was the biggest online shopping day in internet history, and I expect that this year will do the same.
It's rapidly becoming Mobile Monday. Are retailers embracing this with digital ads as a way to reach consumers?
Absolutely. You know what's great about shopping in general is that we can shop in any way that works for us. If we like to shop on our smart device, if we like to shop on our laptop, desktop, in store, retailers are making it really easy for us by offering deals across the board. So consumers should just be opportunistic, looking for deals that work for them, and go shopping.
I've seen websites that have better deals than what's available in stores. Is that still the case? And if so, which ones would you check out first?
That's a great question. So Cyber Monday is reliably very strong in consumer electronics, and we'll see the same again this year. What we do find, though, according to RetailMeNot.com internal data, is that health and beauty items and also apparel tend to be deeply discounted also on Cyber Monday. So for consumers, they should focus on those items for Cyber Monday, and then moving more into December, focus on the other items that tend to be more deeply discounted as we get closer to Christmas, namely holiday merchandise, winter merchandise, and also toys.
Are there certain types of goods that go on sale first? If so, which are those? And what things can we wait on because there might be a sale later on?
Well, definitely, and it'll be the same as last year. I think Amazon is going to be king on Cyber Monday. They are offering some serious discounts all the way up to 70%, so they are definitely the website to check out on Cyber Monday.
Trey Bosch of RetailMeNot.com, thanks very much. Have a great day.
Thanks. Same to you, Chuck.
Still to come, trouble on the farm, why a trader is brushing off concerns about John Deere and going long. Chart Talk is next. Time now for Chart Talk. Dan Stessich from Athena Advisor Services joins us. Hi, Dan.
Hi. Glad to be here today.
You're watching John Deere, which reports some worries about farm sales equipment. What are you seeing with this stock?
Well, you know what? It was interesting. Wednesday when they came out with earnings, the earnings were really good, revenue's really good, but they put out a statement that they were worried about farm equipment sales going on in the future. So they put a little pressure on that stock. It's probably one worth buying. It's a good long-term prospect.
What's your position on John Deere?
I'm long the stock at this point.
Why do you think this stock is having such concerns about sales of farm equipment? I mean, look, we've had two bumper crops of corns and soybeans.
You know, we do have bumper crops, but the big difference is you don't have the revenues coming through. Commodity prices have dropped considerably, so the farmer doesn't have the discretionary income that they may have had. Just like you and I, when we buy a car, we feel confident we have enough money to do it. Well, their funds are a little tight right now, so they're going to delay that purchase just a bit.
That makes sense. You know, they say small cap stocks typically do well during the holidays. Can you tell us why that is, and what about this year?
Well, you know what? I think the reason is small caps are generally new and innovative products, and you start selling a lot of them. And in a good holiday season, we have every reason to believe that this will be one. Those firms are going to benefit. So the products they have to sell are going to be more in demand, and it should help their bottom line.
The optimistic Dan Stesich. Thanks very much.
Thank you very much.
That's a wrap for us today. Coming up tomorrow, Charity Check, how technology is making it easier to give back this Giving Tuesday. From all of us at First Business, thank you for watching.